What's going on, everybody? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, we are going to dive into the market conditions. I'm also going to share with you one of my new portfolios, and then we're going to talk about 5 stocks that are at the top of my watch list going into the week ahead. So let's jump right in. Okay, starting off with my new portfolio, I am building an income-focused portfolio that is going to be focused on cash flow and dividends and interest and disbursements. It is going to be completely focused around generating a safe, sustainable, and high yield for monthly income. That is going to be the 100% focus of it, and I'm very excited about it. I've already started building it. I'm sharing the portfolio on Blossom Social. I have 3 positions in the portfolio right now, and we are averaging over 7% annual yield, which is very, very nice. So if you want to see those holdings, or you want to follow the trades, you want to see my analysis, you want to stay up to date with that monthly income portfolio, definitely check out all my trades on Blossom. The link is in the description to this video. Currently, I am holding HYLD, HDIV, and CASH. Those are 3 different ETFs. One's giving me 5%, one's giving me 10%, and one's giving me 11% yield right now. So if you want to dive into those, you can. But for right now, we are going to dive into the market conditions, starting with the NASDAQ. As you can see, we have been pulling back lately. We just crossed below our 50-day moving average. We also are coming down to a major level of support here. And so if this trend line holds up, we can expect a bounce or possibly a bounce off this 13,000 level. But as of right now, we are trading in a short-term bearish direction within a long-term bullish trend. When this trend line right here breaks down and the price crosses below this trend line, that is going to be confirmation of a bearish trend and a new direction. When it comes to the S&P 500, it actually looks very similar. The angle of the trend line is a little bit different, but we are crossing through our 50-day moving average and again, coming down to a key level of support. And when we look at the Dow Jones, it's actually a little bit different. We've basically been trading sideways for a couple of weeks now after breaking out of a very, very crucial level of resistance that was holding us back here for the better part of almost a year, maybe 8 months here. So very, very important to watch. Now, when it comes to cryptocurrency, Bitcoin is still going in the downwards direction. We fell through our moving average, and it looks like we kind of tried to break back through it, and we got rejected. We're basically trading bearishly to sideways right now, just depending on how you look at it. However, when it comes to oil and gas, West Texas Intermediate crude, which is kind of what I use as sort of the benchmark for the price of oil, is going up. And so that is very good for all of our companies that are producers of oil and gas or transporters of oil and gas. It means that whatever they are selling is worth more, and it means that they're probably going to generate some more profit. So we're going to talk about 1 or 2 of those companies here real quick. But first, let's just dive into earnings. We are starting to get to the end, or kind of the tail section of our earnings week. This week we've got Hut 8 and Suncor both reporting on Monday. We've got Home Depot and Sea Limited on Tuesday. We've got Cisco and Target on Wednesday. We've got Walmart on Thursday. We've got John Deere. We got XPeng. We got a couple of other companies all on Friday. And so lots happening this week with regards to earnings. Lots of exciting companies in here, and we're going to touch base on a couple real quick. But first, I just want to talk about inflation and the market conditions. Last week, we got news that inflation had actually gone up, so that is not a good sign. It went from 3% to 3.2% in July. Not a great thing happening there, and it could give the Federal Reserve more kind of ammunition and justification in order to raise rates higher. We don't have to go through that or kind of anticipate anything, though, for a couple of weeks. I believe the Bank of Canada is going to report at the beginning of September, and then the U.S. Fed is going to report sort of middle of September there. And so most people as of right now think that there will be no change in the rates at that meeting, especially in the United States. I am not so sure. I think there's a chance that we could see rates go higher at the next meeting. However, we don't know either way. We're just going to have to wait and see. Most people are thinking it is probably going to hold steady. One other thing that kind of popped up on my radar, though, that is being sort of interesting is, number one, credit card debt just hit $1 trillion, so that is not good. And then withdrawals from 401ks are up 36% year over year, according to Bank of America. And that means that people are starting to pull money out of their retirements at a higher pace than they have in the past, and at a pretty significantly higher pace. And so that means that maybe people are running out of that kind of cash flow, or maybe they're starting to go negative and they're dipping into their savings to afford their lifestyle. And so that can have negative consequences if that goes on for too long. So I'm watching that closely. Now, when it comes to different companies, at the top of my list right now is energy companies. I really like Suncor. As the price of oil and gas goes up, Suncor is going to generate more profit. This is a good company. They're run pretty well, and over the long term, they're going to be here for a fair while generating profits, and they're not going away anytime soon. So this is definitely something to consider if you're interested in that sector. If you're not interested in that sector and you like the oil or you like the renewable energy sector, kind of the opposite here, you can check out Nextera Energy. I highlighted Brookfield Renewables last week. That company had a good week. I don't want to touch base on them again, but I did look at Nextera Energy this week, and this is, as far as I'm aware, the largest renewables energy operator. And so these guys operate wind and solar farms. As far as I'm aware, they're one of the largest in the world. They currently have a dividend just under 3% here. And they have some major support here, right around $60, $70. You can see we've bounced off these levels several times here in the last few years. And so we are currently at that level. If we fall below this level, then it's like, okay, maybe we've got something different here that we need to deal with. But if we start to bounce off $68 here, $70, that's probably going to be a nice quick little swing trade if you're interested. Or this is probably also going to be a really good company to hold long term. So far, that dividend looks nice and juicy. One company here that is reporting earnings on Thursday, I believe it is Wishpond. This company is a software company with a variety of different marketing tools. They're growing quickly, and they're actually just announced that they're starting to buy back their stock because they think it's undervalued. I personally think it's undervalued as well, especially with their growth rate and how close they are to profitability. I like the company long term. They're doing well, and I've made a couple of videos about them on my channel as well. Now, the last two companies here are Apple and Microsoft. I wanted to point these out because these charts are very similar. They're showing sort of almost identical patterns here. And if you're interested in these companies long term, I want to just share with you my strategy. I like Apple. I like Microsoft. I'm considering adding to my long-term positions here. Apple, if you look at it, it ran all the way up to $200. It got rejected, and now it has come back down to the exact same level here where it got rejected back in July and August of last year. It acted as resistance. Now we have broken through, and now it could be acting as support. If it acts as support, I want to buy in on the bounce off of this level, and I want to set a stop loss just underneath here if I am worried about the risk or if I am worried about it going lower. Now take a look at this chart and take a look at the Microsoft chart. Tell me that these two charts are not nearly identical. Breaking out of previous resistance here, going up to previous highs, coming back down to the exact same level that used to act as resistance and now could act as support. This is going to be pretty much the exact same trade here. I'm just watching these ones closely, and I'll use one and the other for confirmation of whatever trade I decide to get into. Now, if you are interested in learning more about this, all of my courses are totally free on Skillshare. You get 1 month of free access with the other 14,000 students that have already signed up. There's over 400 reviews. There's over 2 million minutes of watch time. And I have courses on the stock market, on options trading, on day trading, on credit building, on personal finance. Pretty much everything you need to equip yourself in the world of finance is available for free for 1 month. So definitely consider signing up. I sincerely appreciate you watching to the end of this video, and thank you so much. Good luck trading, good luck investing, and we'll talk to you soon.